And stocks definitely up, rallying today after yesterday's big declines. So will the momentum continue, or was Monday the first sign of a bigger pullback? Bloomberg's Laura Lee down at the NYSE with the guests to help answer those questions. Laura, over to you.
Thanks, Carol. Joining me now to talk about the economic news today as well as the market, Jerry Webman. He's chief economist over at OppenheimerFunds. Jerry, let's first talk about the market here.
Sure.
What's your reaction to this rebound?
Well, it's, of course, a relief anytime there's a rebound. We saw a sell-off yesterday, started in the foreign markets. Glad to see we've made a big chunk of it back up. It says that there's some legs to this rally. It's got farther to go.
So you think this can continue?
I've always thought that we'd be higher at the end of this year than we were at the beginning. The breakthrough 1,000 came sooner than I would have expected, but I'm not a short-term tactician. So I'm glad we're seeing this. I think it's consistent with the earnings story. Are we off to the races? No, but a nice slow recovery. That's what's in process.
Jerry, I know one of your biggest concerns has been the consumer. Today we got some better than expected retail earnings. Any more optimistic?
Well, notice where the retail earnings came. The good numbers came from the discounters. One of your producers was telling me about more discounts in the consumer gaming, computer gaming area. So you're going to have to cut prices. So top line growth remains a problem. We know companies can earn money at the bottom line by cutting costs, but don't expect the consumer to be back where you and I were spending money 3, 4, 5 years ago. That's not. We just can't put that in the numbers. So it's a caution rather than a fear for the markets.
Is that your biggest concern right now, the consumer?
Actually, my biggest concern right now is in general that the credit system is still very locked up. We're seeing a lot of money being created by the Fed that's not getting into general use throughout the financial system. It's not being invested. It's not being lent. The M's that we used to look at are very flat. So I'm still concerned that money is not getting invested. And investment is what I think has to drive this next cycle, at least in the United States.
I want to ask you about today's housing numbers. The news was a bit mixed. What's your take?
Well, the single-family number was pretty good. I mean, it's lousy compared to what it would have been 3 years ago. We would have been shocked. The multifamily, remember multifamily housing, that's where the big negative was. That's a lumpy thing. A few big projects on, a few big projects off. What's nice was to see some continuing improvement in the single-family starts area. That says housing can cease to be a negative in the economy. It's not going to be the growth factor it was a few years ago, but it's at least supporting us a little bit. It's good news.
So signs of stabilization then?
More signs of stabilization.
Great. And with that, thanks so much, Jerry, for taking the time. That was Jerry Webman, chief economist over at OppenheimerFunds. Matt, I'm going to send it back over to you.
All right, thanks very much.